You've studied every pattern, tested dozens of methods, yet your equity curve remains flat. The real damage isn't from bad trades, it's the cognitive overhead of juggling conflicting approaches. While you're deciding which system to follow today, institutional operators are executing their singular, well-rehearsed campaign. They don't trade multiple strategies. They trade one methodology with unwavering discipline, accumulating positions while you're paralyzed by choice. For example, a trader runs RSI divergence setups on one screen, Wyckoff schematics on another, and moving average crosses on a third. Each system flashes contradictory signals. Price shows distribution characteristics in the Wyckoff framework, yet RSI screams oversold. Buy now. He freezes, takes no position, and watches a 12% move unfold without him. The cost wasn't capital. It was the mental friction that prevented decisive action. Let me tell you something I've observed after decades of studying the tape and the methods of those who consistently extract profits from the market. The truly successful operators, the men who move markets and accumulate wealth, do not scatter their attention across multiple systems. When I speak of the composite operator, I'm referring to that dominant force in the market, the large interests, the pooled capital, the professional syndicates who operate with precision and purpose. These men don't wake up Monday morning deciding to trade breakouts, then switch to oscillators by Wednesday and chase trend following by Friday. Such behavior is the mark of the amateur, the speculator destined to leave his capital in the hands of those who think and act differently. The composite operator follows a campaign. Always, without exception, this campaign consists of 4 distinct phases: accumulation, markup, distribution, and markdown. He accumulates his line when the public is fearful and selling. He marks up prices once his position is established and conditions are favorable. He distributes to the eager crowd near tops when optimism runs highest. Then he marks down, often viciously, to complete the cycle and prepare for the next accumulation phase. This is not theory. This is observable fact if you study price and volume relationships with disciplined attention. Now consider the typical trader I encounter. He's studied Elliott wave, memorized candlestick patterns, programmed moving average crosses, and recently discovered some proprietary indicator promising to unlock market secrets. Each morning, he faces his screens with 5 different analytical frameworks running simultaneously. One system suggests bullish conditions, another flashes warnings, a third remains neutral. He's paralyzed not by lack of information, but by its contradictory abundance. While he deliberates, the composite operator acts. He doesn't need confirmation from multiple systems, because he's reading the only language that matters, the language of supply and demand as expressed through price and volume. He recognizes accumulation because he's seen it hundreds of times. The patterns are ingrained in his consciousness. His response is automatic, confident, and swift. Here's the critical point. Mastery requires singular focus. When I developed my method, I didn't study a dozen different approaches, hoping to synthesize some superior hybrid system. I studied the behavior of stocks, how they moved, why they moved, and most importantly, who was making them move. I observed the footprints of large operators in the tape. I learned to distinguish between genuine accumulation and mere technical rallies. This took years of concentrated study, not months of sampling various techniques. Strategy confusion isn't just inefficient, it's expensive in ways that don't appear on your brokerage statement. You sacrifice depth for breadth. You never develop the intuitive feel that comes from thousands of hours viewing markets through one consistent lens. You remain perpetually intermediate, competent at nothing, while the composite operator, focused, disciplined, methodical, executes his campaign and extracts your capital with mechanical precision. I want to address a phenomenon I've witnessed destroy more promising traders than poor market conditions ever could. The paralysis that comes from mental exhaustion caused by conflicting analytical frameworks. The market moves quickly. Opportunities present themselves in narrow windows. The composite operator doesn't announce his intentions with fanfare. He leaves subtle traces in the tape that must be recognized and acted upon immediately. When you're operating with a trained eye and a singular methodology, this recognition happens almost instantaneously. You see the spring at the end of accumulation and you act. No deliberation, no second guessing. Your preparation has already been done, but observe the trader who has burdened himself with multiple systems. A Wyckoff structure appears, perhaps a clear sign of strength after a prolonged period of accumulation, volume decreasing on reactions, spreading on rallies. The tape is speaking plainly to those who understand its language. Yet this trader cannot act, because he must first consult his other indicators. He glances at his momentum oscillator, it's showing overbought conditions. His moving averages haven't crossed yet. His Elliott wave count suggests one more leg down might be needed. The fundamental analysis he read last night raised concerns about valuations. Now he's trapped in a mental maze of his own construction. Each system demands consideration. Each presents its own logic. And while he's conducting this internal committee meeting, debating which signal deserves priority, the composite operator has already established his position. The optimal entry, the point of maximum safety and minimum risk, passes by unused. This isn't merely inefficiency. This is hemorrhaging opportunity cost at a rate most traders never calculate. I've kept detailed records throughout my career, and I can tell you with certainty, the difference between profit and loss often comes down to mere points of entry. Getting positioned at 48 versus 51 might seem trivial, but compound this across dozens of transactions, and you're looking at the difference between a successful year and a mediocre one. Decision fatigue works insidiously. Each choice you must make, which system to trust, how to weight conflicting signals, whether to override one indicator based on another, depletes your mental reserves. The human mind, however capable, has finite capacity for complex decisions. Spend it reconciling contradictory methodologies, and you'll have nothing left for the actual work of trading, reading the intentions of large operators through their buying and selling patterns. The professional operates differently. His decision tree is simple because his method is singular. When he sees his setup, developed through years of studying the same patterns, the decision to act is automatic, no internal debate, no weighing of conflicting systems. His mental energy remains fresh for the subtle distinctions that matter. Is this accumulation genuine, or is it a rally within a larger distribution? Is the volume confirming the price action, speed in recognition, speed in decision, speed in execution? This is what separates the professional from the perpetual student. You cannot achieve this speed while juggling multiple analytical frameworks. The composite operator knows this. That's why he maintains his discipline, follows his proven campaign, and lets confused traders donate their capital through hesitation and second guessing. There's a dangerous misconception I encounter repeatedly among traders who ought to know better: the belief that employing multiple analytical methods provides some form of protection, a diversification of approach that supposedly reduces risk and increases probability of success. Let me be direct, this is utterly false reasoning, and it costs traders dearly. True diversification in speculation comes from intelligent position sizing, from operating across different time frames when appropriate, from managing capital exposure prudently. It does not and cannot come from simultaneously running contradictory analytical systems that fracture your judgment and create internal warfare at precisely the moments when clarity is most essential. Consider what actually happens when you attempt this supposed diversification of method. You've studied the Wyckoff principles, you understand accumulation, you recognize the tests, you can identify when the composite operator is building his line. The chart before you shows classic accumulation characteristics, a trading range after a decline, volume diminishing on downward movements, preliminary support established, a spring that shakes out weak holders, followed by a sign of strength on expanding volume. The evidence is clear. Large interests are accumulating. The campaign is underway, but you've also programmed momentum indicators on your screen. And these oscillators, designed with entirely different assumptions about market behavior, are flashing warnings. Overbought, they declare. Your moving average system, mechanical in its calculations, hasn't generated its crossover signal yet. Perhaps you've also been following some form of sentiment analysis that suggests excessive optimism. Now you face an impossible choice. Which master do you serve? If you follow the Wyckoff analysis and buy into what appears to be accumulation, you're violating the signals from your other systems. If you wait for confirmation from all systems simultaneously, you'll likely miss the entire markup phase. The composite operator doesn't pause his campaign waiting for your indicators to align. Most traders, faced with this conflict, do something worse than choosing poorly. They compromise. They take a smaller position than their Wyckoff analysis warrants, hedging against the possibility their other systems might be correct. Or they enter tentatively, ready to exit at the first sign of weakness that any of their various systems might identify. This is not diversification. This is the paralysis of uncertainty masquerading as prudent risk management. What you've actually created is internal competition. Your methodologies are fighting each other, and you're the casualty. Instead of the confidence that comes from deep expertise in one approach, you have shallow competence in several, with no trusted framework to guide you when they inevitably contradict one another. I've observed this pattern for decades. The trader who masters one sound method, whether it's tape reading or structural analysis or any other proven approach, and applies it with unwavering discipline, will consistently outperform the trader who divides his attention among multiple systems, regardless of how sophisticated those systems might be individually. The composite operator doesn't diversify his analytical method. He diversifies his holdings while maintaining absolute consistency in how he analyzes supply and demand. He knows that scattered attention produces scattered results. Your protection doesn't come from multiple methods. It comes from one method, thoroughly mastered, applied with disciplined judgment. Let me share an observation that may be uncomfortable, but is nevertheless essential. The development of true expertise in reading markets requires an investment of time and concentrated attention that most traders grossly underestimate. I didn't arrive at my understanding of market operations through casual study or by sampling various techniques until something clicked. I spent years, not weeks, not months, but years, studying price and volume relationship through a singular lens. I watched how stocks behaved during accumulation. I noted the subtle differences between genuine buying by large interests and mere technical rallies that trapped the unwary. I observed hundreds of campaigns by the composite operator from inception to completion. This depth of study is what produces the intuitive feel, the almost instantaneous recognition that separates the professional from the amateur. When I observe accumulation now, I don't consult a checklist or verify against written criteria. I recognize it the way you recognize a familiar face in a crowd, immediately, without conscious analysis, because the pattern is embedded deeply in my experience. This is mastery, and it cannot be achieved while your attention is fragmented across multiple methodologies. Consider the trader who attempts to employ 5 different analytical frameworks. Perhaps he's studied Wyckoff principles for 6 months, Elliott wave theory for 4 months, learned candlestick patterns over a few weeks, programmed some momentum indicators, and recently discovered volume profile analysis. He believes this breadth of knowledge makes him versatile, well-rounded, prepared for any market condition. In reality, he's achieved surface-level competence in several areas while gaining mastery in none. He understands the mechanics, the definitions, the basic patterns, the entry rules. But he lacks the depth that comes only from thousands of hours viewing markets through one consistent framework. He can identify a spring in theory, but he cannot distinguish between a genuine spring that precedes markup and a failed spring that leads to further decline. He knows candlestick patterns by name, but cannot read the story of accumulation and distribution that unfolds across weeks of price action. The composite operator, meanwhile, has been reading the same language for decades. He doesn't think about his analysis. It's become automatic. This frees his mental capacity for what truly matters, judging the balance of supply and demand, timing his campaign for maximum effect, recognizing when conditions favor his operations and when they don't. There's a profound difference between knowing about a concept and having internalized it through repetitive, focused study. The strategy. Hopper knows about many things. The master knows one thing completely. I've kept records of my observations, and the pattern is unmistakable. Traders who commit to one sound methodology and study it relentlessly develop a feel for the market that cannot be replicated through intellectual understanding alone. They begin to sense when something isn't quite right, even when their formal criteria appear satisfied. They recognize opportunity before it becomes obvious. This intuitive expertise, this deep pattern recognition, is the edge that produces consistent profits. You cannot develop it while dividing your study time among competing methodologies, constantly switching between different ways of viewing the same price action. The market doesn't reward the student who has read the most books. It rewards the operator who has mastered one approach so thoroughly that execution becomes second nature. There's an aspect of trading that rarely appears in discussions of methodology or risk management, yet it exerts tremendous influence over results. The finite nature of mental energy and the catastrophic cost of squandering it on unnecessary complexity. I've observed throughout my career that successful speculation demands not just capital and knowledge, but sustained mental clarity, the ability to maintain sharp judgment throughout the trading session, to recognize subtle shifts in the character of price movement, to execute with conviction when opportunity presents itself. These capabilities depend entirely on having adequate psychological reserves. Now consider what happens when a trader burdens himself with multiple analytical systems, each requiring its own set of rules, interpretations, and mental frameworks. Before the market even opens, he must review several different analyses. His Wyckoff charts require studying the recent trading range, identifying tests and springs, evaluating volume characteristics across multiple timeframes. His momentum indicators need checking. Are they aligned, diverging, showing hidden patterns? His Elliott wave count must be updated. Did yesterday's movement complete a sub-wave or invalidate the pattern entirely? Perhaps he's also tracking seasonal tendencies, sentiment indicators, and breadth statistics. Each system consumes attention, each demands mental processing, and we haven't even reached the opening bell. Once trading begins, the cognitive load intensifies exponentially. Every price movement must be interpreted through multiple lenses simultaneously. A rally occurs. Is this the sign of strength following accumulation that Wyckoff analysis suggests, or is it the overbought condition his oscillator warns against? Volume expands. Does this confirm the upward movement, or does his volume profile analysis suggest distribution at these levels? The human mind, however capable, simply wasn't designed to maintain this level of multi-framework analysis for hours on end. Mental fatigue sets in, often without conscious recognition. Judgment deteriorates. Small details get missed. The subtle clues that the composite operator leaves in the tape, The very signals that separate profitable trades from losses go unnoticed because your mental reserves have been exhausted reconciling contradictory systems. Compare this to the operator who has mastered one methodology completely. His morning preparation is focused and efficient. He's looking at the same patterns he's studied for years. When the market opens, his analytical process is streamlined. He's not juggling competing interpretations. He's reading one language fluently. A spring appears, and he recognizes it instantly because he's seen hundreds of them. Volume behavior confirms his analysis without requiring cross-reference to 3 other systems. His mental energy remains fresh because he's not burning it on methodological complexity. He can maintain sharp focus throughout the entire session. When the critical moment arrives, when the composite operator reveals his intentions through decisive action, this trader has the psychological capacity to recognize it and respond immediately. I cannot overstate how significant this advantage becomes when compounded over weeks, months, and years of trading. The strategy hopper arrives at each critical decision point mentally depleted, his judgment clouded by the exhaustion of maintaining multiple frameworks. The single method master arrives fresh, alert, and ready to execute with conviction. The composite operator understands this principle intimately. His campaign is executed with mechanical consistency precisely because he conserves his mental capital for the judgments that matter: timing, position sizing, and reading the true intentions behind price and volume action. Complexity doesn't demonstrate sophistication, it demonstrates confusion. Simplicity, mastery, and conservation of mental resources, these are the hallmarks of professional operation. Gentlemen, we've examined 5 critical ways that strategy confusion silently drains your capital and cripples your effectiveness as a market operator. Now let me bring these observations to their logical conclusion. The market is not a puzzle requiring multiple solutions. It is a battlefield where the composite operator, focused, disciplined, unwavering in his methodology, systematically extracts wealth from those who are scattered, confused, and perpetually searching for the next analytical framework that might finally unlock consistent profits. I've shown you how the large interests operate with singular purpose, executing their campaign of accumulation, markup, distribution, and markdown without deviation. I've demonstrated how decision fatigue destroys your ability to act at precisely the moment when action is required. We've exposed the myth that running multiple systems provides safety, when in reality it creates internal warfare that guarantees mediocrity. You've seen how impossible it is to achieve mastery while fragmenting your attention across competing methodologies. And we've discussed the invisible cost of psychological exhaustion that leaves you mentally depleted when clarity matters most. Now comes the uncomfortable question: what will you do with this knowledge? You stand at a crossroads. One path leads to continued strategy hopping, the perpetual search for some perfect combination of methods, the illusion that more complexity equals better results. This path is comfortable because it allows you to blame your tools rather than examine your discipline. It's populated by thousands of traders who remain perpetually promising but never profitable. The other path requires something far more difficult: commitment. You must choose one sound methodology, whether it's the principles I've taught or another proven approach based on observable supply and demand, and you must commit to mastering it completely. Not for weeks, not until something better comes along, but for years, with the same unwavering focus the composite operator brings to his operations. This commitment means refusing the temptation of new indicators, resisting the lure of different systems, and accepting that mastery comes from depth, not breadth. It means studying the same patterns repeatedly until recognition becomes automatic. It means simplifying your analytical process until your mental energy is conserved for the judgments that actually matter. Let me be clear about what I'm advocating. I'm not suggesting you follow my method specifically, though I believe the principles of supply and demand I've outlined are fundamental to all market movement. What I'm insisting upon is that you follow one method with absolute discipline. The composite operator doesn't fear the trader who knows 10 systems superficially. That trader will donate his capital reliably through hesitation, confusion, and poor execution. The composite operator respects and competes carefully with the operator who has mastered one approach so thoroughly that he can read intentions in the tape, recognize campaigns in their early stages, and execute with the swift confidence that comes only from deep expertise. Your capital is finite. Your time is finite. Your mental energy is finite. The question is whether you'll continue squandering these precious resources on the illusion of diversification through multiple methods, or whether you'll invest them in the only pursuit that produces consistent results, complete mastery of a single, sound approach to reading supply and demand. The market will be here tomorrow, operating by the same fundamental principles it has followed for centuries. The composite operator will continue his campaigns, accumulating when the public is fearful, distributing when optimism runs high. The only variable is you, and whether you'll finally commit to the focused discipline that separates professionals from perpetual students. I've laid the evidence before you. The choice, as always, is yours, but choose wisely and choose soon. Every day spent in strategy confusion is another day the composite operator is strengthening his position while you're weakening yours. The market rewards clarity, discipline, and mastery, nothing else.